Imagine waking up one day and realizing you're no longer stressed about bills, unexpected expenses, or your financial future. Imagine knowing exactly where your money goes, how it grows, and how it can work for you even while you sleep. Most people think wealth is about luck, high income, or background, but it's not. Wealth begins with understanding money, and today, I'm going to show you the simple principles anyone can follow to build financial intelligence and create real freedom. Stay with me until the end, because one mindset shift in this video could completely change your financial life. 1. Budget and track spending. Budgeting is the foundation of financial intelligence because it introduces you to the truth of your financial reality. Most people operate on assumptions, believing they spend less than they actually do, or thinking they are good with money without any real data to support it. The first step toward mastery is awareness, knowing exactly where your money goes and why. You cannot control what you do not understand, and budgeting is simply the practice of shining a light on your habits, impulses, and priorities. Budgeting is often misunderstood as a system of restriction, but in reality, it is a system of direction. Instead of wondering where your paycheck disappeared to, you consciously assign every dollar a role. This intentionality removes financial anxiety because you are no longer operating in the dark. When you track every dollar, whether through an app, a spreadsheet, or a notebook, you begin to see patterns, some empowering, some alarming. These patterns become data points that guide better decisions. The discipline of tracking spending trains your mind to recognize the difference between emotional purchases and essential ones. You start noticing how small expenses add up, how subscription services silently drain your account, and how impulse buying often comes from boredom or stress, not necessity. Financially intelligent people remove randomness from their money. They don't guess, they measure. They don't hope, they plan. Successful individuals understand that money flows where attention goes. By budgeting, you develop a mindset of ownership rather than avoidance. You stop blaming circumstances and start taking responsibility for your financial outcomes. You learn to evaluate your needs versus wants with clarity. This awareness empowers you to redirect wasted money toward meaningful goals: debt freedom, investment contributions, retirement, emergency funds, or personal dreams. Budgeting isn't about living smaller. It's about living smarter. It reveals opportunities you didn't know you had. Many people discover that they already earn enough to save or invest. They just haven't been allocating their resources wisely. A budget becomes a compass that shows you your path forward, preventing financial drift and enabling intentional progress. Ultimately, tracking spending is an act of respect for your future, your labor, and yourself. It transforms money from something that happens to you into something you actively command. And once you take control, you gain clarity. With clarity comes discipline. With discipline comes power. 2. Save aggressively. Saving aggressively is one of the most powerful financial habits you can develop because it immediately shifts the balance of power in your life. Money saved is not just money stored, it is freedom accumulated. Every dollar you save expands your options and protects you from life's unpredictability. Without savings, even small setbacks can become crises. With savings, challenges become manageable and opportunities become accessible. Most people underestimate the psychological strength that comes from having money set aside. It creates a sense of internal stability, a quiet confidence that you are capable of handling what life throws your way. Saving aggressively means prioritizing your future over temporary pleasures. It means learning the discipline of saying no today so you can say yes tomorrow, to bigger dreams, better investments, and more meaningful experiences. Aggressive saving forces clarity. When you challenge yourself to save a larger percentage of your income, 10%, 20%, even 30%, you begin to distinguish what truly matters from what merely feels urgent. You eliminate financial clutter. You learn to live below your means not out of scarcity, but out of strategy. This mindset shift is what separates financially intelligent individuals from those who always struggle. The power of aggressive saving compounds over time. What starts as discipline eventually becomes momentum. As your savings grow, so does your leverage. You gain the ability to invest in opportunities that others cannot. You gain the flexibility to walk away from toxic work environments. You gain the cushion to take risks, starting a business, changing careers, relocating, or pursuing education. Savings are not just financial, they are emotional and psychological armor. Saving aggressively teaches patience and long-term thinking. It rewires your relationship with money, shifting you from instant gratification to delayed gratification. You begin to understand that every dollar has a purpose: to protect you, empower you, and ultimately build your future wealth. The habit of saving becomes a statement that you believe in yourself and your ability to create a better tomorrow. In the end, saving aggressively is not about deprivation. It is about preparation. It is not about limiting your life. It is about expanding your possibilities. Your savings are the foundation upon which every future financial victory will be built. They represent discipline, intention, and resilience. The more you save, the more control you gain, not just over your finances, but over your entire life. 3. Invest consistently. Investing consistently is the engine of wealth creation. Saving protects you, but investing grows you. Money sitting still loses value over time due to inflation, but money that is invested gains power, multiplying through the force of compound growth. Investing is not reserved for the wealthy, it is how people become wealthy. The earlier you begin, the more time works in your favor. Consistent investing is more important than perfect investing. Many people waste years waiting for the right moment to invest, trying to time the market or predict economic conditions. But the truth is simple. Time in the market beats timing the market. Wealth is built not by guessing, but by committing. Whether the market rises or falls in the short term, long-term investors win by staying consistent. Investing gives your money purpose. Stocks, index funds, real estate, businesses, these are vehicles that transform small contributions into significant futures. Even modest monthly investments can grow into substantial wealth when given enough time. The key is discipline. Investing when it's exciting and investing when it's boring. Investing when the market is up and investing when the market is down. Consistency creates momentum. Every contribution, no matter how small, is a brick laid in the foundation of your future financial freedom. Over time, your investments begin to work harder than you do. Compound interest turns your money into an employee that never sleeps. As your investment portfolio grows, it becomes a source of confidence, stability, and opportunity. Investing also teaches patience, emotional control, and long-term thinking. You learn to detach from short-term fluctuations and focus on the big picture. You adopt the mindset of builders, people who understand that great things take time. Investing consistently means trusting the process, even when progress feels slow. Most importantly, investing is a declaration that you are creating a future for yourself. It is a vote of confidence in your long-term goals. It shifts your identity from consumer to owner. When you invest, you participate in the growth of companies, industries, economies, and innovations around the world. In the end, the most important step isn't choosing the perfect investment. It's starting. Start early if you can. Start small if you must. But start consistently, and time will do the rest. Wealth doesn't come to those who wait. It comes to those who build. 4. Avoid debt traps. Debt, by its very nature, is neither virtuous nor evil. It is a tool, and like all tools, its value depends on how it is used. Yet, most people do not wield it with intelligence or intention. They fall into debt the way a traveler stumbles into quicksand, slowly at first, then suddenly all at once. True financial maturity requires understanding the difference between strategic debt and destructive debt, and then having the discipline to avoid the latter entirely. Destructive debt is the kind that promises immediate satisfaction but demands long-term sacrifice. It is the credit card balance that grows faster than your income, the impulse loan taken for a lifestyle you haven't yet earned, the buy now, pay later temptations that mask true affordability. This form of debt is a wealth vacuum, unseen but constantly pulling money, energy, and opportunity out of your life. High interest rates are not merely numbers, they are chains, tightening with each missed payment, each month of complacency, each dollar you hand over to lenders instead of keeping for your future self. But avoiding debt traps requires more than simply rejecting loans. It requires an internal shift in mindset. You must recognize the emotional manipulation behind consumer culture, the psychological hooks designed to make you spend what you do not have. Every advertisement tells you to buy happiness today and pay for it tomorrow. But tomorrow always comes, and its bill is always heavier than expected. Financial intelligence means refusing to negotiate your future in exchange for a fleeting present. Yet, the wise person also understands that not all debt is harmful. Strategic debt, used deliberately and with foresight, can accelerate growth rather than drain it. This includes investment debt that builds assets, business debt that multiplies income, or educational debt that genuinely increases earning power. But even this type of debt must be handled cautiously, with clear exit strategies and realistic projections. A loan taken without a plan is no different from a trap disguised as opportunity. The Stoic approach to debt is simple. Borrow only when the upside significantly outweighs the downside, and never out of impulse, vanity, or social pressure. Live beneath your means, not because you fear poverty, but because you value freedom. Every dollar you do not owe is a dollar you can use to build, invest, rest, or redirect. Financial independence is less about earning huge sums and more about liberating yourself from obligations that bleed your future. To avoid debt traps, cultivate patience, delay gratification, and recognize that wealth is built slowly and quietly, not with flashy purchases or borrowed luxuries. Let your money serve you, not enslave you. The strongest position in life is not having the highest income. It is owing nothing, needing nothing, and possessing the discipline to walk past every temptation that would chain your tomorrow for the sake of today. 5. Study money principles. Wealth is not created in your bank account. It is created in your mind long before you ever see the numbers grow. This is why financial literacy is not a hobby, but a lifelong discipline, an ongoing apprenticeship in the art of making money work for you instead of the other way around. Most people remain financially stuck not because they lack intelligence, talent, or opportunity, but because they were never taught the principles that govern money's behavior. Money is a language, and like any language, it must be learned, practiced, and refined. Those who do not study it remain financially mute, unable to negotiate with life, unprepared for crises, and dependent on others to interpret the world of finance for them. But once you commit to learning, truly learning, the universe of money begins to open in ways that permanently reshape your destiny. Studying money means understanding how wealth is created, how expenses erode income, how compounding grows even the smallest seed, and how markets reward patience but punish emotion. It means reading books written by people who built fortunes, listening to experts who have navigated both success and failure, asking questions that reveal blind spots, and surrounding yourself with conversations that elevate your financial perspective. Every book you read, every course you take, Every financial concept you master is like sharpening your sword in a world where most walk into battle unarmed. The more knowledge you accumulate, the more patterns you begin to recognize. Patterns in your spending behavior, in economic cycles, in investment opportunities, and in the difference between what is urgent and what is important. The person who studies money becomes harder to manipulate, harder to deceive, and harder to intimidate. They are empowered because they understand the mechanics behind financial systems that most people fear or avoid. With knowledge comes clarity, and with clarity comes confidence. And confidence is the foundation of every financial decision you will ever make. Studying money is not about greed. It is about empowerment, dignity, and autonomy. It is about acquiring the skills to protect what you earn, nurture what you grow, and pass on what you build. Wealth, after all, is not something you stumble upon. It is something you intentionally cultivate through informed action. And the more fluent you become in the language of money, the more opportunities you see, opportunities that were invisible when you were financially illiterate. When you study money, you stop asking, "Why am I struggling?" and begin asking, "How can I position myself to win?" You stop waiting for financial miracles and start creating financial strategies. You stop living in reaction and start living in calculation. Mastering money requires humility, the willingness to admit what you do not know, and curiosity, the hunger to learn what you were never taught. Treat financial literacy like a lifelong journey, not a temporary project. The wealthiest individuals in the world are learners before they are earners, students before they are masters. They understand that money flows to those who understand it. And when you study money deeply, consistently, and intelligently, you unlock a form of freedom that cannot be taken from you, no matter the economy, no matter the circumstance, no matter the challenge. Knowledge is the seed from which prosperity grows, and the mind is the soil that must be prepared to receive it. Financial literacy fuels freedom. When you master money, you master choices, opportunities, and your future. The journey to wealth begins with knowledge, so keep learning, keep growing, and let financial intelligence guide your path forward.